Jade Lizard or Iron Condor. If you knew nothing about options, you had no idea what the show is about. Nothing sounds wackier than Jade Lizard or Iron Condor. And just so you know, Jade Lizard is a relatively new strategy. It's been around forever, but it didn't really have a name.
Sure.
So we never used it back on the trading floor. And I don't even know if I ever used the term Iron Condor on a trading floor. Did you?
No.
I don't think so. But that's been a little more popular for probably a little bit longer. But let's let the numbers decide. First of all, a Jade Lizard is essentially an Iron Condor with one less long leg, right? It's a short put and a short call spread. An Iron Condor is a short call spread and a short put spread. So they're basically the same thing, except the Jade Lizard has one more long put. The Iron Condor has one more long put than the Jade Lizard. So essentially, the numbers should say, I'm guessing, but the numbers should say that a Jade Lizard is going to have maybe a slightly better success rate, but that would be my guess. What do you think?
I'm going to go with the Jade Lizard too, even though the Iron Condor has defined risk to both sides. I think the Jade Lizard is probably the winner there.
Well, since the Jade Lizard does not have defined risk to both sides, only to the upside, that if you take more risk, you should make more money. So the Jade Lizard should make more money. But let's see what the numbers say. We have not looked. So we know that both of these are premium selling strategies. The Iron Condor uses a put spread and a call spread to define risk on both sides. On the other hand, the Jade Lizard is slightly more directional. It combines a short put. This is actually not written correctly. It combines a short put with a short call spread to eliminate upside risk. So this setup gives the Jade Lizard a unique profile, especially in bullish or neutral markets with its elevated volatility. So we're going to compare the performance between these two, essentially finding a sweet spot for Jade Lizards where they may shine compared to the Iron Condor. Let's go to the next slide.
Okie dokie. Now, but from this write-up, it doesn't seem like the Jade Lizard looks like the sure winner here.
They didn't make it obvious. Okay. So 10 years of research, 45 days to expiration, managed all at 21 DT. We analyzed multiple metrics to assess the trend in high IVR regimes and low IVR regimes. I'm assuming that both of these are still going to have the same results, although high IVR regimes should be better for Iron Condors, more so than even Jade Lizards. Let's take a look.
Okie dokie.
Oh my God, this is small print, John.
Small print is hard for Tom as he doesn't wear glasses because he doesn't need them.
Excuse me, I have 20/20 vision. I was worrying about you.
That was evident in London for sure.
Despite people that live in glass houses should not throw stones. Despite Iron Condors bringing in more premium, their lower win rate and negative average return suggest the risk-reward ratio isn't favorable over the long run. But Jade Lizards, while collecting less premium, deliver a more consistent and more profitable outcome, especially in low IVR environments. It is noteworthy that the high IVR improves the premium collection, but doesn't translate into better profitability. So here's what we're going to take a look. This is in the SPY. Now, we don't do a lot of, to be fair, we don't do a lot of Jade Lizards or Iron Condors in the SPY. And the reason for that is because the implied volatility is never really that high. But if we take a look and the first slide in the low IVR regime, the win rate for Jade Lizards is going to be high because we rally a lot. And the premium over buying power, it's going to be lower because you're not collecting as much. And the average, let's just see, the average return on capital. I think that's the most important thing. The average return on capital is just under 1%, where it's a negative 1% in the S&Ps in low IVR. We have never been a fan of selling Iron Condors in low IVR. We just don't do it, period. It's a high IVR trade for us. And it's not something that we do in low IVR. Now, we also don't do a lot of Iron Condors in the S&Ps. Now, I'm not exactly sure what... Can you go back a slide, John? So I don't know what the short delta was here. They didn't really say, did they?
No.
Can you go back one more slide for just a quick second? They didn't say here either. Okay, so I don't know what the short delta is, but my guess is they're not wide enough to create these, to make winning trades out of these. In the high IVR regime, yeah, the Jade Lizard outperformed the Iron Condor dramatically as well. Okay, but I just don't know what strikes they use, so I need to find that out. When we look at the last slide was letting go to expiration. When we look at managing early, which is how we generally make all these trades, you can see that in high IVR, you can't tell from these numbers that much. While the Jade Lizards generally outperform on returns, as seen in the previous table, they expose the trader to much larger downside risk, especially at high IVR regimes. Tail risk profile is notably asymmetric. They can work well until they don't. Iron Condors appear more defensively structured, lower rewards, but also tighter risk controls with smaller max losses and average drawdowns. This suggests their utility as a risk managed income strategy, albeit with reduced upside. And again, this is just showing losses on this page, so you can't really see the upside. The analysis clearly demonstrates the Jade Lizard's superiority over the Iron Condor across all measured IVR regimes. That's the way it should be if you're taking unlimited risk in one direction. The strategy shows consistent profitability, higher win rates, and better risk-adjusted returns, while the Iron Condor requires less buying power. Its negative expected returns make it unsuitable for deployment without significant optimization. What is significant optimization? It's wide strikes, high implied volatility, moving it far away from the at the money. So after the study, we found that Jade Lizards consistently outperform Iron Condors in terms of win rate and returns, especially in low IVR environments. However, Jade Lizards come with a higher degree of risk. Iron Condors, while less profitable, offer more stable and controlled risk. The bottom line is that Jade Lizards can be used for better profits when IVR is low and the market is calm, like it is now. Sure. And Iron Condors can be used when you want lower risk or steady exposure. But again, it all depends on your risk tolerance and your trading objectives.